BlackRock gets the reconstruction contracts. So if you want to shut off that spigot of nonstop money to the military-industrial complex, well, let silver go to the moon. If not, these banks who are stupid enough to maintain the largest concentrated short position in any commodity ever traded, this is what happens. And so these countries understand what we're up to, and they're using the suppression against us. We will wake up one morning and see silver go to the moon. First of all, the gold to silver ratio has only been this high maybe 2 or 3 times in history, and it represents what I believe silver does as the most undervalued asset on the planet. 100%. And you're right. Typically, gold will go first, silver will lag behind it, usually during the initial phase, but then typically slingshots and catches up, delivering 2 to 5 times greater returns if history is any guideline. The historic average for 5,000 years was 16 to 1, 16 ounces of silver for every 1 ounce of gold. That was the geologic ratio and the price ratio for over 5,000 years. When we hit the Industrial Revolution, man's ratio, not God's ratio, the mining ratio of 16 to 1, has been since then roughly 42 to 1. That's been the average price ratio. But my buddy Keith Neumeyer, who is in your neck of the woods up there in Vancouver and the CEO of First Majestic, has told me many times, both publicly and professionally, or personally rather, that the real ratio right now is 7 to 1, that silver is found in nature like your skin is epidermis, and silver is found very near the surface. It's called epithermal, and the big deposits were found decades ago. With the current level at 100 to 1, you're talking maybe one of the greatest opportunities I've ever seen. Anytime silver gold ratio gets above 80 to 1, silver is poised for a breakout. I do believe we will see that breakout. In my belief, am I able to share my screen with you? I want to show you why I think this was a, let me open this up. This was a presentation I did at Rick Rule's, here it is, at Rick Rule's conference. Let me share my screen here. This is can you see that? This is a presentation I did at Rick's conference last year. So this is all last year. But that S.2768, a Senate subcommittee bill in 1942. And if we just read the first paragraph, the present consumption of silver for war purposes is at the rate of about 100 million ounces a year and is growing rapidly. According to the War Production Board, it's only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces of silver per year. So silver used to be openly talked about in its military capacity forever. So here your supply demand numbers, which show a 265 million ounce shortfall. All right, here's the supply, or the demand right here. Okay, here's the demand. Industrial 9%, electrical and electronics 9%, photovoltaics 20%, that's solar panels, brazing, alloys and solders 3, other industrial 9, photography -3, jewelry 4, silverware 7. What are we missing? Where's military? Why is military not in there? And maybe this is why silver hasn't performed. This is the COMEX market. The red line represents the biggest 4 commercial banks that are short silver.
You know, there are a few moments in history when you feel the temperature shift, when something fundamental is about to break wide open. And in my view, silver is one of those pressure cookers right now. We're not just talking about a cheap metal anymore. We're talking about a critical asset, arguably the most undervalued on the planet, that has the power to disrupt supply chains, weaponize financial systems, and completely blindside Western institutions that thought they had a firm grip on the controls. But they don't. That grip is slipping, and fast. Let me tell you where we stand. We've got 8 of the largest commercial banks in the Western financial system holding the largest concentrated short position in any commodity ever. Think about that for a second. Not in copper, not in oil, not even in natural gas during a war. It's silver, a precious metal that, according to Keith Neumeyer, comes out of the ground at a 7 to 1 ratio versus gold, but is currently trading at a paper ratio of over 100 to 1. That's not just out of whack, that's industrial scale manipulation, the kind of ratio that screams distortion. And distortions like this don't go on forever. Let's zoom out for a second. If you go back to the historic norm, we're looking at a 5,000-year geologic average of 16 to 1. Even in modern times, the post-industrial revolution average has been around 42 to 1. So if you're sitting there thinking 100 to 1 makes sense in this kind of environment, I've got a bridge to sell you. The pricing mechanism is broken. Period. But you already know that. What's important now is what happens when the dam finally breaks. And here's the thing. It's already breaking. It's just not hitting CNBC's front page yet. But it will. Countries like China and India aren't playing checkers. They're playing 4D chess. China is actively flying officials to Latin America, going direct to the source, buying door bars, sludge, concentrate, you name it, and offering double what the West is willing to pay. Why? Because they know what's coming. Because they are positioning themselves for a world where silver's true value is finally allowed to emerge, and they're going to be the ones holding the physical when the price explodes. They're not waiting for the COMEX to blow up, they're draining it in real time. Let's talk about that too. The COMEX. Most people still think this is a market with integrity. Let me paint you a different picture. They're trading 2.9 billion ounces of silver every single day. That's over 3 times the global annual mine supply. Meanwhile, the LBMA, which claims to have around 800 million ounces in vaults, actually only has 250 million ounces of floatable silver once you remove ETF holdings. You don't need to be a forensic accountant to realize those numbers don't add up. They're leveraging the system 10 to 1, and it's getting worse. So what happens when the music stops? What happens when a few more manufacturing giants or billionaires like David Einhorn start saying, "I want delivery"? Because remember, it's not just about contracts, it's about standing for delivery. And when that happens, when the long side of these paper contracts start demanding actual metal and not cash settlement, that's when you get fireworks. That's when you get the mother of all short squeezes. That's when silver goes vertical. We're starting to see the cracks already. India imported 900 million ounces in the last 5 years. That's not demand, that's desperation. The US military doesn't even list silver usage anymore in official breakdowns of industrial demand. Think about that. We're seeing 265 million ounce deficits annually in published data, and they're not even disclosing military use. Why? Because it's classified. Because they don't want you to know just how dependent advanced weapon systems are on silver. And you better believe that the military-industrial complex has every incentive to keep silver dirt cheap. Look at the ownership structure. Who owns SLV and GLD? BlackRock. JP Morgan. Who are the custodians of those ETFs? BlackRock. JP Morgan. Who owns shares in nearly every major military contractor? You guessed it, BlackRock. So you suppress silver, you suppress input costs for weapons manufacturing, and then, when war breaks out, you sell those same weapons at a markup and get the reconstruction contracts to rebuild the places you just helped destroy. Rinse and repeat. That's not conspiracy, it's corporate strategy. It's no wonder the West is terrified of silver exploding. They'd lose control of one of their key levers of dominance. You let silver run and you unleash a financial firestorm. Not just on the paper markets, but across everything. Input costs go through the roof. Margins collapse. Strategic stockpiles disappear overnight. And guess who's sitting on the real stuff? China, Russia, India, the very countries that are positioning to flip the table on the US-centric financial order. Now, I've said this before and I'll say it again. Silver isn't just an investment, it's a weapon. It's an economic weapon that, once unleashed, turns the tables on decades of Western dominance. And when you factor in silver's role in the energy transition, solar panels, electric vehicles, military-grade technology, what you get is a metal that's not just undervalued, it's systemically critical. And the market is about to find that out the hard way. We are watching the biggest coiled spring in the commodity markets right now. And most people are too distracted by meme stocks or digital coins to notice. But it's coming. One morning, you'll wake up, flip open your phone, and silver will be up 10, 20, 30% overnight. And there will be no offer, no bid, just a giant hole in the market where liquidity used to be. And if you're not holding physical, it's game over.
The green line represents the 4 plus the other 4 big banks. These are 8 Western commercial banks that have the largest short position on silver of any commodity they trade. Now, why the hell would 8 banks, when you have India importing 900 million ounces in the last 5 years, when you have openly saying we're going to add it to our strategic stockpile. When you have China right now, which is the second largest producer in the world, they think they're number one, but let's just call them the second largest producer in the world. And ask Keith Neumeyer about this. Ask Sean Kuhn about this. They're flying, Sean told me to my face, Andy, they are flying all around, and he's the Dolly Varden CEO, or they're flying all around Latin America, in particular Peru, going right to the miners. Remember, the second largest producer in the world. What the hell do they need to do this for? They're going to the miners directly and saying, listen, we'll take your doré and your concentrate, which is crudely refined doré bars before they're sent for further refining and purification, and the sludge, the concentrate. We'll take it all. We'll pay double what the West will, and then we'll send it back to China for further refining. They're using the suppression against us. They're standing for delivery in London. They're standing for delivery on COMEX. They're standing for delivery in Shanghai. But you have 8 banks suppressing the price of silver. And this is what happens when 8 banks suppress the price of silver. These are the London vault totals. So let's suppress it, and the world gets wise to it. They are sophisticated, coordinated, motivated, wealthy, and they are standing for delivery, draining the LBMA. These numbers are below now. They're about 760 million ounces, not 800, of which over 500 belong to the ETFs. They only have 250 million ounces or so available, but they're trading 2.9 billion ounces a day. Are they out of their freaking mind? 2.9 billion per day, 3.5 times global mine supply against a float that's 10 times less than that. And this is because the military-industrial complex needs to make high-tech weapons, doesn't want the world to know about it, suppress the shit out of the price. They own BlackRock, as an example, who is the primary custodian along with JP Morgan for SLV. They just took over, both of them, JP and BlackRock, as the primary custodians of GLD, SLV and GLD, massive holders in PSLV, and they own the majority also of the military contractors, almost all of them. And so they make the weapons, high-tech weapons, to sell around the world, and then you watch them blow up in places like Ukraine, and then who gets the reconstruction contracts? Oh, that's right, it's BlackRock. BlackRock gets the reconstruction contracts. So if you want to shut off that spigot of nonstop money to the military-industrial complex, well, let silver go to the moon. If not, these banks who are stupid enough to maintain the largest concentrated short position in any commodity ever traded, this is what happens. And so these countries understand what we're up to, and they're using the suppression against us. We will wake up one morning and see silver go to the moon.
So let's go a step further now. We're not just talking about a silver short squeeze or a tactical repositioning by Eastern nations anymore. We're talking about the monetary reset, the reintroduction of gold and silver as anchors in a new financial system. One that doesn't revolve around trust in Washington, London, or Brussels, but around trust in something you can hold in your hand. Something without counterparty risk. Something that doesn't depend on debt, manipulation, or a printing press. And I'll tell you what, folks, when that reset comes, it's going to happen faster than anyone expects. These things always seem impossible until they become inevitable. Just ask the people of Argentina, ask the folks in Lebanon, ask anyone who's watched their currency get obliterated. It always starts gradually, slow deterioration of purchasing power, some denial from the media, a few tweaks to policy, a reassuring press conference, and then boom, it's overnight. The banks close, the ATMs stop working, the official exchange rate gets readjusted, and if you weren't prepared, you're out in the cold. That's the environment we're walking into, and that's why I keep hammering the same message. Gold and silver are not trades, they are lifeboats. And right now you still have time to board, but the gangplank is coming up fast. When capital starts to panic, when it runs for the exits from government debt, from fiat currencies, from bloated tech stocks, it doesn't ask politely. It doesn't move in a straight line. It stampedes. You think it's going to be orderly? You think the pension funds and sovereign wealth funds of the world are just going to gradually rotate into physical metals? When the dam breaks, it's going to be a flood. And guess what? There's not enough metal to go around. That's the big dirty secret no one wants to talk about. The same central banks suppressing the price for decades are now the largest buyers. Do you think they're doing that for fun? For nostalgia? They're building their ark before the storm hits. Let's talk supply. The world mines just under 1 billion ounces of silver a year. That sounds like a lot until you realize that industrial demand alone now exceeds that. Solar, EVs, electronics, medical, you name it. And that's before we talk about investment demand, jewelry, or government stockpiling. We are in a structural deficit, and it's only getting worse. Now let's look at where the new supply is supposed to come from. Latin America? Sure, but the best deposits have already been found. New mines take 10 years to develop, assuming you can get permits. Good luck with that in this political climate. And let's not forget, silver isn't usually mined alone. It's a byproduct, which means you can't just crank up the dial like you can with oil. It's constrained, it's tight, and it's being drained. And the people draining it? They're not Reddit traders this time. It's not the silver squeeze crowd. It's nations, sovereign entities, central banks, military contractors. These guys aren't looking to flip silver for a 10% profit. They're locking it down, taking delivery, pulling it off the market permanently. Why? Because they understand where this is heading, because they're preparing for what's next. Now, people always ask me, Andy, when's it going to happen? My answer, it already is. You're watching the transition in real time. You're just not seeing it on the front page of the Wall Street Journal because it doesn't benefit the people who own the Wall Street Journal. They want you asleep. They want you in index funds. They want you buying paper silver and calling it diversification. But here's the kicker. When the music stops, none of that paper matters. What matters is what you hold, and more importantly, what you can actually take possession of. Because the moment people lose confidence in the system, the moment we get that bank holiday, that IMF announcement, that coordinated BRICS statement, whatever it ends up being, it won't be about returns anymore. It will be about access. And let me say this too, people need to be mentally prepared for volatility. We're not going to $100 silver in a straight line. You're going to see 10%, 15%, even 20% swings in a single session. And you know what that is? It's noise. It's the algorithmic traders getting shaken out. It's the weak hands selling to the strong. That's not a signal to panic. That's a signal to double down. Because every one of those shakeouts is designed to do one thing, separate you from your conviction. They want you to believe you're wrong, that you're early, that it's over. Meanwhile, they're loading the truck in the background. It's the same playbook every time. The only question is whether you're on the receiving end or the giving end of that transfer. I also want to address something that's often overlooked. People say, Andy, gold's already at $3,500. Isn't it too late? My response, too late for what? To preserve your wealth? To move into the only asset that has outperformed every fiat currency in history? No, it's not too late. If anything, it's the beginning, because you're still seeing it happen in real time. You're still seeing major institutions out of position. You're still watching ETF flows lag behind price. You're still seeing no coverage from major media. When gold hits $5,000, you'll get some headlines. At $7,000, maybe your financial advisor will mention it. At $10,000, they'll all tell you to buy. And by then, it'll be too late to get size. The premiums will be enormous. The supply will be constrained. The bullion dealers will be sold out, or worse, rationing. You think that's hyperbole? Ask anyone who tried to buy physical metal during COVID. Ask anyone who tried to redeem their ETF for delivery. You won't be the first in line. You'll be last. Now, I'm not saying go all in overnight. I'm saying start shifting now. Reduce exposure to debt instruments. Rotate out of frothy equities. Increase your allocation to physical metal. Use the gold-silver ratio to your advantage. At 100 to 1, you should be loading up on silver like your life depends on it, because financially, it just might. And let me tell you one more thing. Gold and silver don't just protect you, they liberate you. They unshackle you from the broken promises of governments and central banks. They give you independence, optionality, leverage. They are the ultimate exit strategy from a system that's not designed for your benefit, but for your obedience. We are standing on the edge of a new era. And when the dust settles, the people who had the foresight to accumulate real money, real assets, will be the ones rebuilding, not the ones clinging to yield curves and credit spreads and manipulated CPI figures. Those numbers don't matter when trust evaporates. What matters is truth, tangibility, and history. So as we wrap this up, let me leave you with this. Gold is not just rising because of inflation. Silver isn't just undervalued because of manipulation. This is about something far deeper, a turning point in the global order, a rebalancing of monetary power. And if you understand that, if you see what's coming, then you know what to do. Ignore the noise. Stack smart, think long-term, and prepare. Because the window is closing, and when it shuts, it won't open again for a very long time.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.